All right. Quick overview for today. It's Thursday, the 13th of November. No trades today. We had some really good fades. Nothing that we care to take an entry off of, and I'll go over the possible entries and why we didn't take anything and why we faded. Um, Anyways, market overnight traded into this 4 hour gap, rejected off of it, and we carried that momentum coming into market open with a first 15-minute printed candle just straight to the downside, 120 something points, I believe. Yes, market opens, no, 185 points on the first 15-minute candle. So we're looking bearish. We're continuing to look bearish and just respecting higher time frame gaps, and we're just continuing to the downside. So we're looking for just continuation trades, continuation shorts for the day. Um, our first opportunity presented off a 5 minute that was made on that leg down. Looking for continuations off of that. And we got something. I mean, we got the trade, like we traded back up into that 5 minute, but the execution is just where we had to fade it. I would not have caught this. I definitely would have taken this trade, but thanks to PJ again, I was able to fade this trade and not lose any money. So I mean, this is just textbook, right? Like we just sell off, we pull back into a 5 minute for continuation lower, sell off, pull back, lower. I mean, it's simple. That's not what I want to do. And so this is where we get a little technical. And also learning more about breakers. I guess breakers can be used as a continuation model. Again, still need to look into those a little more. But yes, we're using it as like some sort of continuation model entry, continuation entry model to the downside. So we get the 5 minute fill, and then 1 minute breaker block forms. And this is where you could say we need to start slamming shorts, and where a lot of people did slam shorts. We make this higher high, we breaker, make a higher high, we come make a lower low. And so technically the breaker's formed and we're ready to start hitting shorts. But the issue is with the move out of this 5 minute, the V shape just isn't there. We have 1, 2, 3, 4 candles just hanging out. We want to see it like this. We want to see this V shape out of a range, not 4 candles to finally move out of the range. So PJ spotted this in real time, was able to fade it. I followed, and I didn't fade even though it looked so good. Um, so yeah, we were able to fade that just because, like I said, the main factor here was these 4 candles just didn't give us automatic pressure to the downside, which is what we needed, like we got up here. Um, so we had to fade this idea, which is fine. Ended up not stopping us out, not getting in trade, so we didn't have to get stopped out. And so then from there, we're continuing. I mean, we're still looking for shorts. We're kind of just waiting for the market to give us something. We print a 15 minute off that initial move, which we inverse. So we make this 15 minute, we inverse it. So you might think we're thinking longs, but we didn't make a higher high right here. So maybe that's why we didn't want to follow through with longs. Maybe bearish pressure is just that crazy right now. And looking at it too, here, I'll put that back up. On the lower time frames, you'd think, yeah, we inverse it, we tap back into it, and we go higher. But it's just the market doesn't even give us the opportunity to find a setup for a 15 minute inverse. It's what you need to see. Like we don't even get on the 1 minute. It's like this is that 15 minute inverse we get. So you think, okay, we inverse, we want to come back down and look long maybe. Well, we don't even like on this pullback, we don't even get a fake inverse fair value gap to the upside to then bring it lower. It just goes straight after inverse, just straight down. So that trade idea was gone for longs. So we can say goodbye to that. That's our first half of the session, and then we're second half of the session still looking shorts. I mean, especially looking shorts now. At this point, we still had new week opening gap open. Actually, not new week opening gap, but we had this 1 hour gap and other draws lower. Not crazy draws, but still draws lower that we could trade into. We were scouting out this 15-minute gap right here, which never got traded back into. We're looking for, another continuation model to go lower. This 15-minute never gets drawn back into. Not even later in the session, we just bleed down. The only opportunity that we could have had for a second entry after, hold on, let me move this a little bit. After this failed idea on this 5-minute that we didn't get, after inversing the 15-minute and not going back up, looking for shorts again, the only opportunity we had after this was to retrace back up here because this was our area for the 15-minute gap, which we didn't get a tap into. So as you can see, this was the area for the 15-minute. As you can see, we have another 5-minute gap right here. And we have this 5-minute gap here. So if we're looking for retraces in continuation models, we're looking for this to come up and hit this 15-minute, this area being the 15-minute gap. Of course, we don't get that. So the only option we have is to take it off this last presented fair value gap of the leg, because we got first presented gap right here, a 5-minute, another 5-minute gap here, which is also a 15-minute gap, and our last presented 5-minute gap of the leg. Not high probability if you were taking a continuation model. You want to see price trade up back into the 15-minute for continuation, or even better, trade up into this 5-minute, the first presented fair value gap of the leg. That's even better. So we see it trades back up into the last presented 5-minute gap, but that's just not high probability. And you'll see even we get an entry off of it, but I don't take the entry just because it's low probability. Here, I'll zoom in on this. We can get rid of. There we go. We can get rid of these guys. So again, this 5-minute gap is the last presented 5-minute gap, low probability, because most likely, most of the time, price is just gonna trade back higher and then go in your direction. So there's no point to take it off this. It's low probability. But I drew up something to see if it was even gonna be a possibility, which it almost was, but again, low probability, so we don't take it. So you see this is on the 1-minute. We trade back up into that 5-minute gap and we get good movement here. I do like this movement. That's nice. As you can see, first presented 1-minute gap, we inverse it. We make a 1-minute gap on the way down to inverse that gap. So if we're looking to take a short here, you're entering let's say even off this. And so you have to put stops. The high or the lowest you could put these stops is 30-ish points, maybe 31 points. You're at the top of the inversion. You're at the top of this 1-minute gap. You can't really put stops. The next high is into this 5-minute again, 57 points. That just doesn't make sense to run that. And so it's too costly to run this. It's too risky, too much risk on the table to run this, because the safest stop is this high up here, but that's damn near 60 points. You can't run that. And so if you put on this trade, you have, if you want to reduce your risk a little bit, you're putting your stop loss at the top of this 1-minute gap, which you can see before any take profits will get hit, any real profits get hit, you get stopped out. Nothing past a 1R goes through on this before you get stopped out. And it comes back, retests the 5-minute, and it's just a slow bleed of price after that. Nothing here. So you can see this last presented 5-minute gap for an entry doesn't work. Even though this is the technicality you like to see on the continuation, you like to see trade back up into it, go get out of there with speed. It's just 1 or 2 candles. So I like the V shape out of this gap. I like that we're inversing this gap, making a new gap while we're inversing it. Stops were just too wide, and I don't like the probability of, again, last presented 5-minute gap. And it's late in the session. No one's really looking to take that. That was just something I spotted, but something I wanted to add in this video to point out to myself in the future, is like really hammering down the whole continuation model and what's high probability, what's not. So, I mean, the main story of the day just being this breaker that we didn't get, well, that we didn't take because of this candle entry, but that's about it for the day. No trades. We're able to protect capital and fade what looks like decent probability price action, but just isn't. And we live to trade another day. So that was it. Again, Thursday, the 13th of November, and that's the day. Peace.